Hi everyone, I'm David. Many of you know me as TalkingCents on Twitter. I've been DM'd quite a bit now asking me about the formulas and the metrics that I use when it comes to investing. So I just want to show you where I get my information, how I do it, just so that I can offer you some guidance on how you can go about it to make better investment decisions or even trading decisions. So before we start, I just want to share with you two platforms that I use 95% of the time. The first one is Yahoo Finance, which is the one we are going to spend most of the time on. We are going to look at the balance sheet and the income statement of Sibanye-Stillwater. But before we get into that, I just want to share with you the second platform I use, and that is TradingView. So I'm sure most of you are already familiar with this and may even use it yourself. You can see on the right I have my watch list. So this is the key thing that I do first. I create a watch list of the companies I'm interested in, and I add and remove to them as the situation changes or the more I learn about a company. So I rely on technical analysis and fundamental analysis when I make a decision in investments or trading. So because we are sticking with Sibanye-Stillwater, that will be used as our case study, I just want to show you an analysis that I did on them, which I stick to, and it helps me make decisions, rational decisions, and stay calm during market noise. So you can see on May 25th, I put this analysis together about potential upside rewards and potential risks going down to the downside. And I plotted it at about 63 Rand, 67 cents, and it was based on this uptrend that I saw happening. At the time, I wanted it to hold above 63 and push higher, bounce off that support line and go up. Because if you go back to September to December, from about August last year to early February, Sibanye was in this ascending triangle wedge where you can see it's blue. It went up, went down, went up, went down, and then broke up to the upside out of that ascending wedge, lower lows each time. And I believe we are in that ascending wedge again in this uptrend, and that's what I'm using as my technical analysis. You can still see it's still making higher lows as it moves up. So it may still test this trend line down in the short term before it moves up, but I think it will continue testing this trend line, making its way up, breaking out of the second ascending triangle and pushing higher up more than 76 Rand. So since then, we can see its movements. It had a small pullback, quite a drastic one, where people could have panicked, thinking that it was going to touch down to 55. I loaded up some at that time because I believed that it was overdone, and based on this uptrend, it would make its way back in the block. So in the short term, we might still see some downwards movement, but it should hold above 64. If it doesn't, I can manage risk to the downside with my stop losses. But long term, Sibanye is a long-term play for me, and I believe it's going to push up. So I'm going to put that aside, just showing you how I use technical analysis to help me. And then I focus on the fundamentals, basically the strength of the company. So let's look at Sibanye's income statement quickly. And I'm going to point out a few things that you need to take note of. So you'll see first of all that it says all numbers are in thousands. Sibanye is calculated in rands. It's a South African company, so we can naturally assume that the totals are in rands. So this is 127 billion Rand. Alright, remember it's in thousands, and that is the total revenue Sibanye earned over a 12-month period. TTM stands for trailing 12 months. So Yahoo Finance, I'm working with the latest data that they have available to us. You can get up-to-date data by going directly to the company's website, downloading their quarterly financials or their yearly financials. And the beauty about it is you can compare it to previous years to actually show you how they've been growing revenue in that time. You can see in 2017, their revenue was 45 billion. And fast forward to 2020, only 3 years later, their revenue is at 127 billion. That's over 100% increase over that time. So that's one important thing you can look at. Is the company growing? Is their revenue growing? What's their cost of revenue in comparison to previous years? Is their gross profit growing? All the things you can compare. So cost of revenue is how much it costs to get their product to market, or their service, all the costs that are involved, and you deduct that from the total revenue, which leaves you with a gross profit of 42 million. So you can see in the trailing 12 months, 2020, Sibanye made 42 billion in gross profit. Now that's not net profit because they still need to pay taxes and certain other operating expenses onto that. So if we look at their net income, we can go down here. We can see that after all their expenses, after their gross profit, they were left with a magical number of 29 billion rand in profit. That is for anything that they want to do, distribute to shareholders in dividends, reinvest the money to make a better return on investment in the future. So that benefits the business, shareholders, and ultimately everyone involved in the company. You can see the year before how they were making a loss in 2018. That is when they did expansion programs. They took on heavy debt to expand their business offshore. At that time, you could have got Sibanye for a real bargain because investors neglected it. So always, you've got to take note that net income can sometimes be negative, but what are they using that money for? Is the assets going to generate them cash flow in the future? Is their investment going to pay off? So it's not necessarily that they've made a bad net income, it's a bad company. You really have to dive in deep to find out where they're investing their money, what's their plan, and what they plan to do with all of it. So let's fast forward back to 2020. We have 29 billion in profit, net income. For us to work out gross margin, we can take the gross profit, alright, which is, we know is 42 billion, and we can divide that by the revenue, and we get our answer. You'll see the calculations all on Twitter, so I'm just showing you where you can find it. Gross profit, remember gross is before your expenses. So you can also get net profit margin, which obviously you would be using a different profit segment. You would be using your net income, not your gross. And you can still work out the percentage. So just based on this, 42 billion divided by 127. I'm going to just do this calculation for you quickly to show you what I am talking about. And you will see that the gross margin profit is 33% for Sibanye. So you would just take the gross profit margin and you would divide it by total revenue, and that is 33%. That's the difference between the revenue and the cost. So that's a very good number in my opinion. You can also get the operating margin. The same thing, you find that you get operation margin, divide that by the total revenue. Okay, so you get your operating income, which is 39 billion. And then you can divide that by the revenue and you get your operating income, and I think that is 30%. So you use the income statement to find out how much they're earning, what their cost is, what their gross profit is, and then you can work out by doing the math sums. There are built-in calculators on the internet to help you, or you can just do it manually by yourself. There's an important thing that I want to point out too, so we're going to move on to the balance sheet, because the balance sheet will show us what assets the company has. Not what assets the company has, but the value of the assets that it has. So for total assets for Sibanye, we see that they have 134 billion in total assets. Total liabilities would be 63 billion. So you can see they have more assets than their total liabilities. We'll get into that now because that's shareholders' equity. If you minus your liabilities from your assets, the value that you're left with is your surplus. That's basically your net worth. That is the equity that the business has. So before we get into that, I just want to teach you the current ratio. Current ratio is the company getting in money and paying out money over the next year. So current assets are 52 billion. is telling us that Sibanye has 52 billion in cash, or things that they can convert to cash very quickly to get that cash. So they've got 52 billion in cash that they have access to over the next 12 months because it's current assets. And if you look at their liabilities, you will see that they have current liabilities of 17 billion. So what is that telling me? That's telling me that they have more short-term cash in hand than the liabilities that they need to pay. So they're high in liquidity, almost 3 times over. So if they're faced with let's say a labor strike or a shutdown or emergency, they actually have the funds to deal and address with that situation without tapping into credit or going into debt. So for me, that's a big positive. They have enough liquidity to keep their day-to-day running. So that's current assets. That will show you what I've just explained, the liquidity of a company. And then let's just quickly go to long-term assets. Like I said, 134 billion. And their long-term liabilities. Long-term assets could be buildings, property, plant, equipment, investments, things they can't really sell right now for cash quickly, so it's long-term. Same with the long-term liabilities. Those could be long-term debts that mature. It's all the debt that they have in total. So we take total assets, minus it from total liabilities, and we're left with total equity. Alright, so the total equity that's left is 70 billion rand, 716 million. So that's the net worth of the company. Alright, but that doesn't all go to all the shareholders. You'll see there's a breakdown here. It shows you stockholders' equity. So that's the shareholders of Sibanye. They have 68 billion available to them in equity. You'll see that it says minority interest of 2 billion. So Sibanye is the parent company and they have a subsidiary, right? So in that subsidiary, they don't own 100% of it. Maybe an outside company owns 15% on that subsidiary and Sibanye owns 85%. So Sibanye can't add the full value of that subsidiary to their shareholders' equity because that is a minority stake that has 15%. On their balance sheet of that company, they'll add their 15% equity of that subsidiary. Alright, so the true equity here is 68 billion for shareholders in Sibanye. But that's still very excellent, and it shows you that if the company goes bust today, most likely you're going to be alright. The company's very strong and it's not overvalued relative to how much it's actually worth. So that's shareholders' equity. Other things that I can point down, we have the shareholders' equity we've just gone through. Earnings per share. So earnings per share is when you take your net income and you divide that by the outstanding number of shares. So again, we're going to use the balance sheet for that. We're going to find the net income first of all on the income statement. Alright, you'll see that the net income is over here. Net income, there we go. You'll see the net income is 29 billion. 29 billion. So that's after their gross profit, after they've paid their taxes and other expenses that they need to pay on that money. They're actually left with 29 billion dollars. Not dollars, sorry, rands. Okay, then you take the 29 billion rand and you divide that by the outstanding number of shares. You go back to the balance sheet, and you look for outstanding shares on the balance sheet. You'll find it here. Shares issued, 2.9 billion shares of issuance, and you divide that by the net income. So you take 29 billion, you divide it by 2.9 million shares, and you are left with 10. So what that means is that you get 10 rand. Sibanye makes 10 rand for every share that it has in issuance. So that's basically profit for each shareholder that has a share. They're making you 10 rand. Okay, they're not giving you the full 10 rand. That's just an equation that you can use to show you how they are managing their money and how much they are producing. So for me, I want a company that is making me money, so I know I can receive dividends in the long run. For me, that's a big tick for adding passive income to my portfolio over the long term. If a company is producing negative earnings, then there's something wrong. Either they're trying to grow their books, grow the company rapidly, and they're using a lot of debt, so they aren't earning anything at the moment, but maybe long term, their return on investment will come back. But I try and stay away from negative earnings because you can just see that the company's not making profits. And I'm into buying companies that make profit. Alright, another metric that we can look at, which a lot of people are common with, but they don't actually understand how to work it out, is the PE ratio. It's the price per earnings. So what you do there, you take your share price. So your PE ratio is worked out by your current share price. So you can see on my screen here, I'm just going to use the current share price of Sibanye now, and which is 65 Rand 70 cents. Alright, and you divide that by your earnings per share. So we worked out the earnings per share was 10 Rand, right? Okay, so we take 65 Rand and we divide that by 10, and we're left with the earnings, a PE ratio of 6.57. So that's very low. 6.5 PE ratio. Alright, and then that is how you work out PE ratio. That is where you find it on the balance sheet, income statement. So you'll need to use the income statement, the balance sheet in conjunction to work out the formulas, and you'll need to know what the formula is with the correct totals to do the math to work out the correct percentages. So that's what I wanted to show you today, the income statement, the balance sheet, and then there's also the cash flow, but that will be another video for another day. That will show you the free cash flow that the company has. I'll quickly mention it. You see they have 17 billion Rand in free cash flow. Alright, so you know, I've told you already they've got high liquidity. They are not going to tap into any loans at the moment to service short-term debts or to keep the operations running, which is fantastic. They're not going into debt, they are growing. Okay, they're creating profits and they're expanding their business without needing to use debt. I think I've covered all of them. We do get return on equity, so I'll briefly touch on the rest. Is where you take your net income. Again, you got to go to your income statement to find your net income. Click on the drop down, you'll see 29 billion Rand, and then you divide that by the shareholders' equity. And then you are left with an answer of 42%. So that's extremely extractive. It's basically measuring the profitability in relation to the equity. So that's again return on equity, thumbs up in my book. I'm a buyer. Then we can look at return on assets. Return on assets, again, you're going to use your net income of 29 billion and you're going to divide that by total assets. You can see your net income over here and your total assets on your balance sheet, which is 134 billion. You divide that by your total assets and you get an answer for your return on assets. Anything over 20, thumbs up in my book. Sibanye is 21.85%. So again, it's ticking every single one of my boxes. So the question is, why would I not want to invest? I'm managing my risk by learning technical analysis. I can trade it on the short term, or if I'm an investor over the long term, I'm buying the dips until I see a clear reversal. If it breaks 55, then I know we are entering into a downtrend, because now I'm creating lower lows. Okay, either the market is wrong and it's selling it because there's been a certain event, maybe gold has dropped, or there's been bombs, or there's panic in the market, and then it will sell. So I'm now a fundamental, I'll shift to my fundamental side. I go, well, nothing's changed in the company. It's still producing, here's its balance sheet, it's producing profit margins, gross profit margins of over 20%, over 30%. So why am I wanting to sell it? There's no need to panic. So I'm buying more. When there's blood on the street, I'm buying more. I'm using technical analysis to tell me what's happening in the short term, but I'm using fundamental analysis to tell me what I need to be doing in the long term. So guys, I'm going to wrap it up here. I don't want to make my video too long. I hope you've got some value out of this. If you want to thank me, please hit subscribe. Drop me a DM in my Twitter inbox. Let me know if you found this information useful. And yeah, thanks guys. Thanks for sharing. Keep in contact.